Well, members, LA here. This is the weekly review, April 2nd, recorded here on the 4th. Last week, market worked higher. It's the same thing that we've seen for a good while now, and that is that no matter what happens in terms of sell side, somehow the buyers keep coming in and taking this higher. The thing to note last week in particular was that you had the Nasdaq NDX leading to the upside. We haven't seen that in a long time. If that's a pattern, that's going to be important. So we'll have to manage and monitor that. Year-to-date gains pretty big. Year-to-date losses pretty big if you're in the bonds or in the gold market. And the dollar has worked itself higher. This is something that we should focus on a little bit in one of the charts as well as we go through this. Rotation is what's happening, right? We're seeing money come from one area to another. It's a way that the market deals with excess. So when the market has had a nice big move and it starts going sideways, a lot of this can either be working it off in time can occur when you have the rotation taking place. So in other words, money moves from one sector to another, and this just continues to hang up here in the higher price zone, and allows a lot of the indicators that most people watch to work themselves back to something more reasonable, especially those that have to do with moving averages and momentum. All right, let's look at the charts here. So the all-time highs hit on the S&P, 4,000 number breached. There are some targets, we'll show those in a bit, that are higher, but this market keeps doing what it has to do. And you can see some of those targets very easily just looking at this chart. You can see from here to there is an ABCD structure, so A to B point, redrawn C point down to here, and that takes you on up to the next level. So everything positive here. What should happen when you get a breakout like this? So in other words, just got this breakout, well, this becomes your retest regen zone, and you also have these highs from over here, even though they've been breached before. And the fact that they have been breached before suggests that this thing will come back fairly quickly and get that retest. And so I wouldn't be surprised to see us trade in here, and you'll see that with the prognostication at the end of the show. So taking away the short term, the daily, and moving to the weekly, this is just a steady advance. It has been ever since we left the bottom. And so all the way up, all the way from this area down here, where we closed at the lows, got the reversal, and then shot up, it's been a steady advance all the way across, and it continues. And all this volume and stuff you can forget. As long as you don't break swing points, this thing can continue, and that's what it's been doing. And if you look at this point right here is going to print the next low. We're 4 into it, 2 more, which are likely to print without a new or lower low. That will end up your higher swing point low as we continue up. This swing point high, never tested. A lot of times people will say gaps get tested, swing point highs get tested. Well, yeah, maybe most of the time, but not all the time. And this is a case where it just simply never got retested. It's been that strong. Nasdaq has been the key group on the downside. You can see this huge consolidation has been going on. This is on the daily chart. There is a little ABCD structure here that can take us up to new highs, get over these swing point highs. These are the key ones. 13.6, kind of the date with destiny, needs to get over that. If it does, probably goes back and sets new highs. And so that's the picture on the Nasdaq, the broad Nasdaq. Now the NDX is already showing that is probably going to happen. You can see a swing point high here and here. Just got over them. You see the red arrow telling you that. This area here is still going to be heavy resistance, so it wouldn't be surprising to see this pull back into a test. Now, if the test takes place, you can see that these are deeper, and so we could see a fairly larger retrace take place. Speaking of a retrace, you had an ABCD structure here. Oops. Let me try that again. And that was from this little point here up. Take it back, and you can see that's already completed. And so you're moving over swing point highs. They suggest you will come back within 6 bars, and you're moving into resistance. All of that tends to suggest that we're probably going to see some sort of retrace on the NDX. Small caps. Small caps had pushed this market higher and higher and higher. They had a huge run for the last year, as we know. They're coming back up. They just finished off a little ABCD themselves, coming into a swing point high. Even if they get over this, again, they should come back into a retest, and it's a fairly deep one. So I don't know that we're out of the woods yet, but if you look back here again at the S&P, the steady advancing, this probably is going to continue to try and work higher. Moving to the bullish retest, bullish and bearish trends, these continue to suggest that we're a little bit on the overbought side if you use trend as a means of looking at breadth. Breadth is extremely high. We're over that area that typically sees a correction, and we're much farther under it. So all of this suggests that at any point, right, you could get that larger retrace. And so it's just one of those things that's hanging out there that you have to be aware of, and you have to do whatever trading you're going to do with some sort of a plan as to what you'll do if that happens. So as I've said the last few weeks here, the key in this market is the bonds and the dollar. Right? These have been the items that have led to larger moves. And if you look here at the weekly now on the Treasury, there's this swing point low here that was on a huge, if you go back to March of last year, you set a high, you set a low. Those price points between those two were extremely large. That became the range. And that range typically holds for a long period of time, and that's exactly what it did. It broke down here, and now you're coming back into it to retest regen. Now, we did retest regen here last week, and it was sold. The fact that it was sold says, hey, this thing can regenerate lower. In other words, it can go even farther to the downside. But the fact that this had already made a large move, right, a large sustained move, that could trade deeper back up into this. And so I wouldn't be surprised using this bar that we could get a retrace back up at the 142, 143 area, right, the top of this bar. That wouldn't be surprising, shall we say, and some sort of a range build out here as a result of that. And if it does, that's probably market friendly. What wouldn't be market friendly is if this actually turned and started down again, because rates move opposite to bonds. And so the yields would actually go higher, right, if the bonds go lower. And so that is the danger, and that's why we keep watching this. And now I'm looking at the TLT, but you could pull it up, look at it on a 10-year or 5-year. It doesn't matter. They're all doing the same thing, just at different degrees. The other piece of this is the dollar itself. If you look at the dollar came in and did a retest regen off this swing point low. So the break was here. That's this arrow. You come back up, you retest, you try to regen, can't quite get under it. Now you go a full retest. Now, the good news here is that this zone, it was more than 6 bars before you came back to test. The test was here, way more than 6 bars. That says that it should only test the bottom third. That's what it tried to do, but then it went on up and tested the top third. That says that this thing is quote-unquote stronger than we think. That, too, is something to monitor, because their swing point high is just a little bit farther up, and I'm on the weekly, so most of the noise is in here that you'd see on the daily. If this continues higher, this itself could start to become a problem. So we'll have to see how this plays out. A dollar going lower is typically good for international type companies. A dollar going higher is not that good. So in other words, S&P type companies. So again, something to watch. The real thing to watch, like we've talked about before, are fast moves, fast directional moves. Back in March last year when we had the meltdown, that was what you got. That was also what you got on the bonds. We don't see that. So incrementally, if we start breaking higher, it will take a little while before the market will register that. And we'll see, some sort of a larger move as a result of the breakout. That itself will cause a reaction. These things are at least weeks away, though, most likely, if they're going to affect us. So we keep monitoring, and we'll see what happens. But right now, I don't think they're a major concern. Success breeds success. This is kind of momentum. When the market, and I've said this many different ways, Charles Kirk is really good about talking about this idea. And I kind of borrowed his idea of where you set a target, you move to the target, and you succeed, right? So he calls it form, fire, and fulfill. So in other words, we're using ABCDs, right? So it forms, it fires, and then it fulfills the target. And so that success, if you do that repeatedly, just like when we have multiple neoclassical things that tell us something's going to happen, and there's multiples pointing to the same price point. Those things, when you get multiples, it gives you a better chance of actually getting there. Well, when you see success over and over and over, which is what we've been seeing, these are all in the past year, bullish ABCD structures on various time frames that have actually, formed. B prices formed, the C prices, when they get over it, it's fired, and here's the fulfillment. And all of these hit, every one of them. Where have they failed? Well, if we're looking at daily or higher in terms of time frame, only one. If you go back over the last year, only one has failed. That's a pretty bullish picture. I didn't count these, but you got 4, 6, 8, 10, 12 of them. 12 succeed, 1 fails, and you got 5 more in place, ranging anywhere from 40, 45 roughly to almost 42 that are in place, that have formed. Some of these have already fired, and now we're going for the targets. Actually, all of these have fired. And so all of these have formed, fired, and now they're trying to get fulfillment. The fact that there's 5, the fact that we've done this over and over again, suggests this market wants to continue to work higher. This is the most bullish thing about this market. Okay, trading plan. Last week got some good gains. Aggressively pursued some new positions last week, raising our portfolio size as well as our position size. We've also been able, this morning, went through them, once a week, and usually once a week at least, if not more often. Review the positions, raised a number of stops this morning. I think 5 of the 10 stops. Those are doing well, and we're just cutting risk and allowing it to try and move on to its targets, just as we were talking about ABCDs on the S&P 500. Politically, fundamentally, still not a lot going on here. I mean, the political stuff just doesn't seem to matter. The fundamental stuff doesn't seem to matter either, because the economic data keeps coming in much hotter than people expect. And we wonder if the S&P is going to be able to take and run with this ideal of the infrastructure, $2 trillion that Biden has suggested. The thing here is, I don't know that this is going to do a lot to the market. In other words, it's not like the $2 trillion we just passed on the COVID. This probably is going to play out over 6-8 months before it ever happens. And if you look at the details of it, it's a 10-year plan for $2 trillion. It's not like all at once. and it raises taxes immediately if it goes through as it's suggested, as it was introduced. And so I don't know that this is going to drive this market. What's going to drive this market is earnings, and those start up in 10 days. And so we'll see whether the earnings get bought or sold. I think that's going to be the next driver in this market in either direction. If you look at the last week, we actually, it was the most likely scenario that has overtaken the other two scenarios individually, although collectively it's still lower. Looking at next week, I think the best case would actually go up and hit target, the highest of the two targets, which is up around 40.90. Best case, to me, probably doesn't have a high probability this week. I think the more likely case is coming back to test this swing point high doing the retest regen. So maybe, the most likely case we come out, a little bump up, and come back, retest, kind of narrow retest, which would be more bullish than expected. Worst case, you'd actually do the full retest, or at least the bottom 2/3, or the bottom third, I should say. That would be the worst case. But overall, this still is a pretty bullish case in general. That's the way the market is, still looking pretty good. I would continue to lean long, have your stops in place, just let the market do its work. Take care. I'll see you next time.